Folks, this ought to be illegal. This is absolutely freaking maddening. What you're about to see in this video is exactly how wealthy, rich, hedge funds, institutions, and suits screw all of us by turning us into their pawns and ripping us off out of millions to billions of dollars. This stuff ought to be investigated, and people like this should be in jail. Take a listen to this scenario here, folks. It's March of 2020, the start of the real pandemic in markets. We knew COVID was coming as of late January, but the real panic really started in March of 2020. And what you're about to listen to is a clip from March 18th. This date is really important. March 18th of 2020. All right, you ready for this? We're going to listen to about 30 seconds of this. I'm going to jump to various different spots just so you have a little bit of an understanding of what Bill Ackman said on March 18th, what he was doing at the time, what he then did, and what he's got to say for us today. Let's get into this shady ridiculousness. You ready for this? Here we go. Let's put it on single speed because it's worth listening to in single speed. All right, here we go.
Now they'll want to bring in Bill Ackman on the phone. He took to Twitter today to urge the president to take more dramatic measures to stop the spread of the virus. Bill, I thank you for joining us today.
Thank you, Scott.
A number of ideas you put forth. I'm going to read one of them for our viewers to start. Mr. President, the only answer is to shut down the country for the next 30 days and close the borders, you say. Tell all Americans that you are putting us on an extended spring break at home with family, keeping only essential services open. The government pays wages until we reopen. I know from our conversations that you have been worried for some time. How did it manifest today with these tweets and going public?
Well, maybe just a little bit of context. You know, I'm an optimist, but beginning in, late January, I was getting increasingly bearish. And
all right, so I'm going to pause it here. Remember what what was just said. The president needs to act more tough. The president needs to shut down, pay everyone's wages, bring the economy to a complete halt, shut everything down for 30 days to slow the spread. He's an optimist, but all of a sudden he's extremely bearish. Oh my gosh, everything's going terrible. In fact, things are going to be so bad, we are going to be in a new era. Listen to what the era sounds like we're going to be in. Here you go.
A period in the country injected. We will go. A vaccine is manufactured, distributed, and injected. We will go through a depression era period in the country, and millions of people will die around the globe.
So, in other words, until we have a vaccine, we're going through a depression era period. Keep in mind, in March, we thought vaccines would take years to manufacture. Now, we're not going to debate about the efficacy of what we ended up getting in the short time frame that we ended up getting it. We're not going to debate that. We all know what happened to the market. But the point is, first, president shut down everything for 30 days. Bring the economy to zero. But keep in mind, we're going through a depression, not for the next 30 days. We're going through a depression for the next years until we get a vaccine, was his message in March. But wait, folks, what does he say about the hotels? Let's listen to what he says about the hotels and how low they're going. And what do you think the lowest is a stock price can go? Listen to this.
Look at Hilton stock. We're a major shareholder of Hilton. Hilton is the canary in the coal mine. This is an incredibly well-capitalized, amazing, dominant global company that actually doesn't own many hotels. It just collects royalties. It's down from like 120 to 50. Okay, it's going to zero. Okay, along with every other hotel company in the world. You know, Park Hotels and Resorts. This, stock's down from 33 to 4.
It's going to zero. Listen to the CNBC anchor reiterate this.
This is a spin-off from Hilton. Why is it down from 33 to 4? Because every hotel is going to be shut down in the country. Everyone.
Hang on just 1 second. You say Hilton is going to zero? I mean...
Oh, no, again, I'm a major shareholder. What I'm saying is, if we allow this to continue the way we allow it to continue, okay, every hotel company in the world, okay, is done. Okay, because...
Listen to this, okay? So wait a minute. We're at the start of a depression era that's going to last years, unless the president shuts us down for 30 days to slow the spread, and we bring our economy to zero, or our GDP to zero. But even if we do that, we still have to wait years for the vaccine, is the messaging he shares, and hotels are going to zero. Everything's going to zero. It's all going to zero. Okay. So what was happening at the same time Bill Ackman was on this call? Well, folks, Bill Ackman was actively shorting the market. He was substantially shorting the market. In fact, he took out $27 million in credit default swaps, far out of the money credit default swaps. And just 5 days later, on March 23rd, the market hits rock bottom. And guess what Bill Ackman does just 5 days later? Bill Ackman warned hell is coming because of virus. He then pocketed $2 billion in bets against the market. This article posted Wednesday, the 25th, 2 days after the bottom market, and 2 days after he closed his bearish bets and was able to cheer, hey guys, we did it. We opened up a bunch of shorts. We went on, told everybody about how hell is coming, how a depression era is coming that's going to last years, that hotels are going to zero, and unless the president shuts down the economy and brings it to zero for 30 days, we're all screwed, and even if he does, we're probably screwed anyway. Right after that, pockets $2 billion, 100xing his bet against the market after the fear he perpetuated, and this was widely circulated, and it all began with his tweets, okay? So, folks, what's happening right now? What's this effer, this manipulating douchebag doing today? Take a look at this, folks. What kind of fear do we have today? We don't have coronavirus fears. We have fears over the Fed. And oh my gosh, if we tighten, the market's going to go to zero, right? If we tighten and the Federal Reserve raises rates, we're screwed. That's the fear we have right now. And the fear is because, oh my gosh, well, inflation is so bad, right? And if inflation is worsening, then the Federal Reserve is going to have to continue to tighten and raise rates, and that's it. Our economy is going to zero. We're screwed. We're done. It's over. Look at this, folks. While I am filming this video, here's someone on CNBC warning for big tech investors see 50% plus plunge. Oh my gosh, more sell-offs, right? When in the meantime, thank you so much to course member Bimal for sharing this chart here. This is what the market usually does when we have a rate hike and rate tightening cycle. Take a look at this. The average market response during a rate cut cycle is a return of about 23 to 32%. And during rate hike periods of time, we tend to see a return of somewhere between 54 to 102% returns on average. So in other words, the market actually outperforms during rate hike cycles compared to rate cut cycles, which is absolutely mind-blowing. But forget about that for a moment. Forget about that potential historical reality. Let's just look forward for a moment. What is Bill Ackman telling us? What is this hedgy suit telling us? Well, let's take a look, folks. Here we go. Bill Ackman, January 15th. While it has become conventional wisdom that the Federal Reserve will raise rates 3 to 4 times this year to mitigate inflation, the market expects a 25% basis point increment, 0.25% increase in rates. The unresolved elephant in the room is the loss of the Federal Reserve's perceived credibility as an inflation fighter, and whether 3 to 4 rate hikes would therefore be enough. The Federal Reserve could work to restore its credibility with an initial 50 basis point move to shock and awe the market, which would demonstrate the Fed's resolve on inflation. The Fed is losing the inflation battle and is behind where it needs to be. With the painful economic consequences for the most vulnerable, a 50 basis point initial move would have the reflexive effect of reducing inflation expectations, which would moderate the need for more aggressive and economically painful steps in the future. Just a thought. Oh, don't mind me shorting the crap out of the market, basically and we don't know, we're just guessing that he's probably doing the same thing he did in 2020. But he's basically putting his thumb in a wound, going, yeah, you like that? You like that feeling of more pain? How about some more pain, huh? How about some more pain while he's squeezing out cash out of the market and robbing you blind from behind, taking all the money out of your wallet. This guy, in my opinion, should be investigated. If he's shorting the market right now, he's a freaking fraud. Now, he's able to make money, but he's doing so stealing from people. And that is the scummiest form of capitalism that I believe exists in this world. But folks, what's actually happening with the market's inflation expectations? Because Bill Ackman is implying that inflation expectations are going through the roof. Well, wait a minute. Let's see what the bond market is doing. We know that treasury yields are going up, but there's actually a measure called the treasury break-even rates. And this is when we subtract treasury yields on, let's say, a 10 or a 5-year from the 10 or 5-year treasury inflation-protected security. So that way we can establish what does the market think inflation is likely going to be like, or what are market and expectations for inflation. Even though treasury yields are going up, take a look at what's happening to treasury expectations, to inflation expectations. Folks, nothing. We are lower than where we were in October and November in terms of inflation expectations. We are lower, and we have had absolutely no spike here in January that has lasted beyond this little spike right here. We've had nothing that's lasted in 2022 so far, meaning the market is actually not pricing in more inflation expectations. The market's falling, quite frankly, because the market's falling. And because hedge funds and institutions and suits are making money shorting the crap out of this market under the fear that all of a sudden the Fed hiking rates is such a bad thing and that inflation expectations are going through the roof, when that is not true. Inflation expectations are not going through the roof. The bond market is telling that to us loud and clear. Instead, it's scumbags like this trying to shake out the weak hands out of the market and rob people blind by putting pressure and pain where it don't belong, because they're scumbags who aren't transparent with their positions. And this is why I am 100% transparent with absolutely everything I do in my portfolio. If you join my Stocks and Psychology of Money program, you will learn to think like I do when it comes to the market. And to me, this is a signal of the freaking bottom. This is a signal of the bottom. Be careful with margin, but I am bullish on this market. I'm not going anywhere. I'm not effing leaving. If you want to see exactly what I'm doing, you want to learn about my psychology, check out the links in the description down below for building your wealth. No matter what market we're in, I'm on your side, and I'm here with private course member live streams every single day that the market is open. Thank you so much for watching, and folks, we'll see you in the next one. Goodbye. Oh, and use that coupon code within the next like 10 days, because it does expire and then the price goes up. Full transparency, the price goes up.